Good morning and welcome to the Market Forecast. Today is Wednesday, July the 14th. I'm John Hoagland. As always, thanks for trusting me with your time. As usual, we're going to be looking for accurate context in the markets, good risk management, and as always, exercising patience. Announcement this morning, we do have group coaching today at 1 p.m. I'm going to put in the link to join me for group coaching. Don't have any emailed in questions that I've found so far, but you can always email in questions first or just ask questions on the fly during the group's coaching session. Unfortunately, today was supposed to be market therapy with Dr. Menaker. Dr. Menaker has run into a scheduling hiccup. He's not going to be with us today, so we'll look forward to August 11th, the next time we have the good doctor with us. And we'll hope that he is ready and everything is good for him next time. As always, we check the economic numbers first. 7:30, the PPI numbers came out. All four of them came out higher than expected. We do have Chairman Powell and Treasury Secretary Yellen speaking in front of Congress for the next 2 days of testimony. All eyes and ears will, I'm sure, be on the idea that if they still think that inflation is going to be transitory. We're getting some information in CPI and PPI telling us perhaps something a little bit different. 9:30 p.m. this morning in Central Time, we have the EIA Petroleum Status Report. About a 4 million barrel draw from the API last night, expecting a little bit bigger draw in crude stocks here from the EIA, but we'll have to wait till 9:30 to find out. Sometimes those are some pretty big misses. Again, the testimony today starts at 11 o'clock, and 1 o'clock, the beige book comes out. Not expected to be impactful, but it's always a little bit of a shot across the bow that the FOMC meeting is 2 weeks away. So we've got that again to look forward to. Always something to look forward to. Always something to look forward to. As far as stock futures are concerned, everything is looking good this morning. We've got some differing looks in the charts between the A-mini S&P and the NASDAQ. We're going to take a look at those very shortly. Both of them telling a little bit of a different story. But we do have some more bank releases as far as earnings are concerned. Bank of America was about flat. Wells Fargo, Citigroup, I have not been able to have the moment to check those just yet, but BlackRock beating expectations. We also had Delta Airlines releasing earnings this morning, beating on both earnings per share and revenues. Crude prices are drifting higher on slowing inventory reduction. In other words, the reduction in inventory seems to be happening at a slower pace. Also, we're dealing with possibly with some demand issues with rising COVID infections. So conflicting information in the crude oil market, opening just now in range, in value. Didn't quite get the settlement price on there, but we'll take care of that shortly. As always, smash the lucky like button, share, questions, feedback, heckling are always welcome. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. And a quick look into the VIX, down just under 5%, back down to 1629. Dollar index slipping a little bit, down at 92.44. And the 10-year yield currently holding at 1.37%. Gotta say good morning to everybody as always. Appreciate everybody being here and saying hello and good morning. Brian, good morning. Your good morning to the best trader community. We think so. Thank you very much for saying that, Jorge. Good morning, Theo. Bill, Murph, market recap either very late or very early today. We were right on time. I know you're looking forward to an earlier start for that, and we do take that feedback very seriously and are considering starting this a little bit earlier. Danielle, good morning. Yes, we are having the pre-market review. James, Laura, good morning. Caesar, Zorain, Jim, Vince, good to see you this morning. The Chef Magallanes is here. Good morning. Greg, Jerry is awake, and I hope I am too. Jason Cargill, Buenos Wednesday. Deanna Floyd, good morning. George Adams. Keith, good morning. Hope you're feeling all right today. Taurus Ednelson, good morning. Justin Day Trades. Hey, John, it's Justin Fireman. It's good to see you. Also, good to see you as always. Micah, Trading Research, good morning. Vici, good morning. Andres, Ryan, and Ryan, Raise Our Trades. It's good to see everyone this morning. We're going to see if we can't take a look at these markets and at least put them in context and see if there's little spots where we may be able to catch some fish. Why don't we jump in as we speak, and let me make sure I've got the daily and crude up here. Try and be as prepared as possible. Let's dive in. Hello, Daniel. All right. So it's rollover week in crude oil. We can't forget that. By Thursday or Friday, we'll be trading September crude. It's Wednesday today. Still looking at the August crude. The API last night was a 4 million barrel draw. EIA looking for a 4.3 million barrel draw. We've been seeing open interest overall. When you look at crude oil, there's so many. It trades so far into the future with really substantial open interest. The August contract lost 31,000, but the overall total number of open interest continues to increase, telling me that there's possibly some movement in the near future, because the market is really kind of filling up with positions. When that happens, we tend to see some moves happening. I'm not expecting them during rollover, although that can happen. We've got our weekly kickoff high at 76.90, weekly kickoff low at 72.30, relatively wide numbers. Look at the range that we had last week. So really just kind of, I think our longer time frame traders are trying to get a cheap rollover done more than worrying about becoming directional. Of course, they will be if provoked. Today we have an inside extended trading hour range. This market, I believe, is still largely short time frame controlled because, again, it is in rollover and our bigger traders are working on getting a cheap rollover. I'll be watching the EIA petroleum status report here at 9:30 Central for a bit of a miss. Now, looking into the 30-minute chart, where are we? Well, we are. Let me get the settlement price on there, which was, by the way, 75.25, right where we are currently trading. So I'm just going to pop this on there. We don't have any overnight inventory. We're trading right at settlement. We're trading right at point of control from yesterday. This is a very comfy, cozy place for this market to be. So I'm going to try and stay really patient today and look for opportunities as the day goes on. I'll be looking at the extremes of the area of balance that we can kind of see here. We've got a naked point of control from last week up here. We've got another one down here. These will be areas that I'll start to look for fish. Not in a hurry, not thinking we're going to miss much here because we are in range and we are in value. The opening range remains the high of the session. That could change things relatively quickly here. But because the market is opening in range and in value, and we have the EIA petroleum status report in a couple of hours, I'm probably going to stay patient and see if there's anything I can react to as the dust settles after the crude release at 9:30 Central. All right. Fascinating things going on here in our equities markets. When we look at what happened here yesterday, we put in an all-time high on decent volume. We added 7,200 in open interest, but the market opened, traded higher, put in an all-time high, and then closed lower. As a matter of fact, it closed below, well, not below, but really very close to our weekly kickoff high here at 43.60. Those that are looking at this are noticing this is a bearish engulfing pattern. It's also what some would call in technical analysis a key reversal day. The market opened, traded higher, traded lower, and closed lower. We seeing that playing out for us today? No, we're not. But 43.60, if given the opportunity, is going to be somewhat pivotal because it is obviously become a little bit magnetic. This market is perfectly capable of ignoring the bearish engulfing pattern and the reversal pattern, key reversal pattern that it put forth yesterday. Taking point, here's another one. Bearish engulfing pattern. The market opens, looks higher, closes lower, and the market just continues to move higher. The encouraging thing is the range from yesterday was overlapping higher, and we moved value, I think, but we moved value lower. So there's some real contradiction going on in the S&Ps that we're not seeing in the NASDAQ. Take a look at the 30-minute chart. Okay, here's our our move higher, which range was overlapping higher the previous range. We found support near 43.60 in the day time frame yesterday after the number came out. We put in a new high and then we closed lower. So even though range was higher, value actually moved lower. When we're looking at value, that's not necessarily a good upside sign. We're already above weekly kickoff high. We've got nothing but space above us. Be watching to see if we can take out yesterday's high. Do we have any overnight inventory? Well, I'm going to go with yes, we do. We've got some overnight longs, just many of them very fresh into the market after the 7:30 numbers came out. What are we going to do? Well, we don't think we're going to open with a gap. If we have some overnight inventory, it's to the long side. Watch for a value area, value area play where if we can re-accept inside value from yesterday, that might bring us right back down to value low, which, by the way, is exactly at weekly kickoff high. Looks like this is a bit of a target-rich environment down here. We've got settlement. We've got last week's high from just kind of sitting down here. We've got yesterday's low. Looks like an interesting spot if given the opportunity. What about an opening range trade? We're opening out of value, but still in range. The market is, looking like it's trying to continue this move to the upside. If the opening range remains the low, that may be an indication that buyers are still in control. If the opening range remains the high, that may be an indication that buyers have kind of vacated. We don't have to worry about the fact that the all-time high was in the overnight. It was yesterday in the regular trading hour sessions. So there's going to be some interesting opportunities. Trade what you see today, and I have my own thoughts of what this market is going to do. I don't want to color anybody's ideas that they may have, but it's the tea leaves are not quite as strong in the S&Ps as they are in the NASDAQ. So we'll watch the open in the S&Ps to see if there's early opportunity. NASDAQ, totally a different story. They're so similar yet so different. Oops, that's not what I'm looking for. This is the one I'm looking for. This market is just so toeing the line. I mean, it is just running right along the center double yellow line on the highway here. It's just riding right on it. No reversal pattern yesterday. Volume was pretty good yesterday on kind of a pullback and then a return back to higher levels. We added 14,000 in open interest. Still money coming into the upside here. The still just toeing that line. Seems intent to really get up there and touch that big fat round number, 15,000 weekly kickoff high. Everybody's got their eyes on it. And when traders have their eyes on something, they tend to make it go. Take a look at the 30-minute chart. Okay, settlements all the way down here, 14,865. Put that on your charts. We've got some considerably longer overnight inventory in the NASDAQ than we can kind of assume in the S&Ps. The S&Ps is much newer short time frame, weaker hands, longs coming into the market, but kind of a similar situation. We've got an all-time high that we put in yesterday. We've got 15,000, very, very close to it. What was the high yesterday? 14,994.75, within 5 points of that big fat round number. Are we going to actually hit it? So the same kind of situation is prevalent in short time frame between the S&Ps and the Nasdaq. We've got no gap. We're going to be opening above value. We put in an all-time high yesterday. Watch for the opening range. If the opening range is small enough in the Nasdaq, which that first range for the first minute of trade tends to be pretty big, it might offer an opportunity. But otherwise, I'll look for opportunities at weekly kickoff high. Maybe there's going to be some fish up there. This is another target-rich environment down here. We've got point of control, settlement, value low from yesterday, and last week's high, very tightly packed. There's likely to be some fish swimming around in this area here if given the opportunity. Gold. We've been so range bound for so long, and finally prior to the open we start to get some legs to the upside. The markets tend to do that sometimes. The breakout's going to occur before the regular trading hour session, which further complicates life for the day trader. We've been talking about recent increases in open interest and discussing the fact that that's building energy. Now we've got more inflationary information in the economy, and what's the best store of value? Historically, gold. Now we've got some Bitcoin and some cryptocurrencies that are challenging gold for the best store of value. However, it's not going to change the fact that many investors look to have gold protect their assets when there is an inflationary period, when the dollar is weak. But typically, of course, gold is going to go higher. Inflationary period, here we come. So we've got the breakout of balance, which I'm really kind of viewing as last week's high. We've got a pretty decent move to the upside here. It's creating a bigger opportunity for us. We've got weekly kickoff high, which is right up here at 1835 even. It's going to be a decent target for upside if we do get there. It offers the opportunity to look for a change in direction from there because it gives us the opportunity to limit the risk. Take a look at the at the 30. Well, we're on the 30. So, we kind of glazed over the daily. All these highs up here and last week's high, kind of enveloping an upside digestion that is now being continued upon. It's going to be a tricky day. There's nothing that says that this market can't try and come and close the gap. If we do get an opportunity down to last week's high or a gap close, I feel like there's some fish down here. I think there's some fish up here as well. The opening range was neither the high nor the low of the session, so that's not going to be much help for us. We've got, looks like a little bit of a double top here, which, in auction theory says that's not a very strong rejection of price up at that level. So I'll be looking for opportunities to find some fish down around last week's high into the gap close. I'll be looking to find some fish if we can get up to this 1835 weekly kickoff high. In the middle here, I got to try and stay patient and look for the right opportunity. The right opportunity may not be something we seek out. It may be something that seeks us out. When something happens and you look at that and you say, that's cheap. I got to take that. We're good. So don't go looking for trades. Make them come to you. If they do. They don't always, and that's okay. Not having a position is as much a position as having a position. If you're not seeing things, the market's not aligning with your strategy, then you don't do anything. Here's the euro. Again, we had a pretty deep move and a close below weekly kickoff low. We lost 4,200 in open interest. What does that mean? It means that this move to the downside did not bring new selling into the marketplace. It evaporated some longs. Those longs that got out were taking selling power away from the marketplace. The news this morning has knocked the dollar down a little bit. That's of course going to bolster the foreign currencies a little bit. Settlements down here, 1796. And we see the market kind of retracing, coming back above weekly kickoff low. This move to the downside because of the drop in open interest, I consider a hollow auction. There's nothing to it. If we had increased open interest on this move below that level, I would be more encouraged to look for opportunities to sell strength. Because we lost open interest, I'm thinking better opportunity to buy weakness. Now, anything can happen, of course. We're just looking at the things that we use to give us the context or the opportunity. Fish, how about weekly kickoff low, point of control value low from yesterday? Looks interesting enough to me. We'll see if we get the opportunity to look for a trade there. And finally, to the 10-year. Similar situation as the euro, let's say. We have a move to the downside and a close below an important inflection level that lost 53,000 in open interest. There was no interest in continuing this move to the downside. This was traders getting out of longs, perhaps in very bad trade location. And now they have taken some of that selling power out of the marketplace. Settlement right at the low from yesterday, very similar to the euro, 132 and 31 and a half ticks. Remember, these are 32-point ticks, so it's not like 100 ticks. This market trades in 30 seconds and in half ticks of 30 seconds, so 64ths. Look what happens when we get back up there and the market opens and brings us back above this weekly kickoff level, back inside value from yesterday. We get a pretty decent move. We've already pretty much taken care of the value area special situation play. I'm late to the party in this one. Drones over Texas. I'm late on this one as well. I'm going to just have to be kind of monitoring. We've still got a little bit of a gap left above here that might be targeted visually and does offer an opportunity to perhaps find a few fish. We do have lots of other areas of visuals to target. Naked point of control above and the high of last week's range. We've also got a couple of naked points of control and the low of last week and a previous weekly kickoff low down here. But the way this thing has kind of turned around and the lack of open interest on this move to the downside has me looking for opportunities to buy weakness in good trade location in the 10-year, at least for now. So that's the market forecast for this morning. We've got about 5 minutes before the equities start to open up, so we're going to get a little bit of time to prepare ourselves and think about what I talked about. There's so many people that have a difficult time maintaining patience and not over trading, and maybe even trading when they're compromised emotionally or compromised by fear. It's better to just step away, get yourself together, wait, and look for an opportunity that says something to you. We go looking for chances. We go looking for trades. We're going to find lots of them, and most of them aren't going to be the good ones that we're looking for. The market's telling you what it's doing. Get real good at understanding what the market is saying. It's got its own language. Its language changes from now and again. Once you have the right answer, it's going to change the questions. 1 + 1 rarely equals 2 in this environment. Once we know that and we can use our knowledge of the markets and our self-knowledge and understanding how our fear is relating to all the other fear-based traders out there, not that we're fear-based, but when we sense that fear, we know that a lot of the other like time-framed and like bankrolled traders, we know where they're feeling it because we feel it. you got to act differently. Most of those traders aren't going to make money. Change the way you respond to those fears. I think emotion is an extremely important thing to keep track of in day trading. There are also always going to be those that are going to disagree. That's why I think it's so important to have the opportunity to talk to Dr. Menaker. Unfortunately, again, that's not going to happen today, but we do have group coaching today. See you there, 1 o'clock. Let's take our deep breath and be ready for the trading day today. Humble, grateful, and creative in your trading today. I'm looking forward to seeing all of you on the group coaching, and hopefully Dan will be back again today for the market recap. I know he's been a busy guy, and but we'll be here to wrap things up if he's too busy. So trade well today. Get out there, profit. See you at 1 o'clock for group coaching.